What's up everybody? Welcome to the Stocks channel. My name is Cory and tonight's episode will be your stock market technical analysis update. But before we get into the charts, you know what you gotta do. Go ahead and smash that like button and subscribe to the channel to follow along with all of my updates. First up, we'll look at the ticker symbol SPY, which is our SP500 ETF. So let's go ahead and crack open this chart and see what's going on in the stock market today. Alright, so with today's price action on the SPY ETF, we did see a bullish day with the SPY ETF closing up 1.77%. Now that is yet again another close above the moving averages, and we do like to see that close is above that 20 simple moving average, which is showing us that our short-term bullish trend is still intact. Now we know we have that short-term bullish trend with that 5 EMA trading above the 13 EMA and the price action closing above that 20 simple moving average. Now while we do have this short-term bullish trend and while we are starting to buy right here on the Stocks channel, it's still very important to identify the risk below us. So we still don't have that higher high on the daily chart, and we really need to see a close above 342 to let us know that this medium-term bearish trend is ending and we're starting to see that medium-term bullish trend develop. Now we know we have a medium-term bearish trend because we still have a negative sloping 20 simple moving average, and we still need a few more bullish days to start snapping that medium-term bearish trend, and we would like to see that higher high on the daily chart with a SPY close above $342. Don't forget, we also have this gap of support below at 331, and the gap will close if we do get price action down into the $329 range. So I am a buyer of this market, but I do have my risk limited by setting stop losses below these support levels just in case this bullish trend reverses. We will get stopped out of our position. Now we could start to raise that stop loss as the market goes higher so that we will get stopped out for a profit, which reduces the risk into an actual reward. So like I said, this market is short-term bullish and we do want to be buyers, but I can't stress it enough to limit your risk and know your exits in any event that we do see a reversal of this trend. Now one concern I do have with today's price action is we did have a very bullish day going up 1.77%. But if we bring our attention down here to the volume, we see that it was on significant less volume. And if you're a follower of the Stocks channel, you know we like to follow the big money and we like to follow the smart money. And we know they have a lot of volume. So if they're bullish on this market, we would have expected to see a day like today have significant more volume. And with the volume being reduced on an update, it's really just telling me that it's more likely retail investors buying in. And we don't necessarily want to follow retail investors. However, that's not all there is to it. We still have a bullish trend and we do have bullish price action, and that's why we're a buyer of the stocks right now. But I still do see underlying risk in this market, and I don't think we're fully out of the volatile trading just yet, and we're not likely to see smooth sailing from here on out. But overall, a win is a win, and today we see another bullish price action close, and we are trading well above the moving averages now, which is a great sign, and it is a step in the right direction for the bulls. Next up, let's take a look at the Nasdaq 100, and we're looking at the QQQ ETF, and we see another bullish day on the Nasdaq 100 closing up 2.13%. Now we're also closing above the 20 simple moving average, and we have that 5 EMA trading above that 13 EMA, which is telling us that we do have that short-term bullish trend. We see that 20 simple moving average starting to flatten out, which is reducing the negative slope, which is meaning that medium-term bearish trend is starting to reverse as well. So overall, things are looking great. We're starting to get close to forming that daily higher high again, and it would be nice to see the QQQs come back and close above $281 and begin to form those higher highs on this market. Now don't forget, our support levels on the Nasdaq 100 are right around the 20 simple moving average and this gap that opened below, around $273 and $272. That's a huge level of support because it's also where that 50 EMA is lined up with. And if we break below those levels, that will be a huge warning sign that we're going to see lower price targets, because the bulls should be able to keep the price action above these critical support levels if we're going to see higher price levels. Now I have the same concern with the Nasdaq 100. If you take your attention down here to the volume, we do have significantly lower volume on a day that we went up over 2%. So that doesn't tell me there was a lot of big money buying today. And if we're not seeing a lot of big money buying, I'm not completely sold that this rally is the real deal just yet. So there's still profits to be made in this trade, and there's still bullish price action that we can take advantage of. But like I said before with the S&P 500, manage your risk and start hiking those stop losses up, so that if we do start seeing lower prices, we will lock out these trades for a profitable gain. Next up is the Dow Jones, and we're looking at the DIA ETF, and we do see very bullish price action on the Dow Jones as well, going up 1.7% today. Now we have a solid close above the 20 simple moving average, and we're starting to see the bullish trend pick up momentum because we see that 5 EMA breaking away from the 13 EMA, showing us that the short-term bullish trend is picking up speed. The 20 simple moving average is nicely flattening out, and it doesn't look like it's at that negative slope anymore, which is showing that we could be going into a nice neutral or even medium-term bull market on the Dow Jones. Now our support levels are at the 20 simple moving average at $275, and we do have the 50 EMA down at 274. But don't forget, we still have this gap open at 273, and that gap will close at $272. So we could come all the way down to the gap closure, which would still be the last level of support for the bulls, and we would still have higher highs and higher lows forming on the daily chart. Now to get fully bullish on the Dow Jones, we want to see a close back above 282, which will be our daily higher high on this stock chart, and that will tell us that the bulls are back in control and we could come back up and test those previous all-time highs. So next up, let's take a look at the VIX, which is our fear indicator, and we do see that the VIX went up 1.19% today. Now that is a significant finding because we don't want to see the VIX going up on a day that the stock market is going higher. So we have multiple concerns right now, and that's why we want to manage our risk. Remember, our first concern is that we went up a lot on the stock market today on lower volume, which shows us that the big money is not the ones buying. And we also see the market going higher on a day that the VIX is also going higher. So if you take a look at the VIX, it's breaking back into our support trend line, and we do see a close above the 20 simple moving average and the 5 EMA breaking back above the 13 EMA. So the last time we saw the VIX going up while the stock market going up, we called that a warning sign, and we did see a stock market correction shortly thereafter. So it doesn't mean you have to panic, and it doesn't mean sell all of your stocks. It simply means that there's underlying risk in this market, and we want to manage that risk by knowing our exits and setting those stop losses accordingly. So right now we need to respect the VIX, and we need to respect the warning sign that it's giving us, and it's telling us that there is fear entering this market, and we are not seeing evidence that the big money is buying in. So we see evidence of fear with the VIX going higher, and we see low volume on higher price action days. So that means just manage your risk accordingly. Next up, we'll take a look at the financial sector, and we do see the financial sector looking very good today, and we're starting to see a bullish trend develop with that 5 EMA finally breaking above the 13 EMA and the price action closing above that 20 simple moving average. We also got a nice close above the 50 EMA, and it does look like the financials are starting to break that short-term bearish trend. However, remember, on the financial market, we still have lower highs and lower lows, and we still have this resistance trend line. We need to see the financials come out and close above and start forming higher highs and higher lows on the daily chart to let us know that they're reversing to a bullish trend. So if the financials remain in a bearish trend, we're not expecting to see new all-time highs on the S&P 500. But if the financials can come and break out of this bearish market and start forming a bullish trend, that will be a great sign that the S&P 500 could see new all-time highs to end the year. Next up is the industrial sector, and we do see industrials also looking bullish, closing above the 20 simple moving average, and we see that 5 EMA starting to create separation, which is telling us that bullish trend is picking up momentum. So it does look good with the financials and the industrials starting to look somewhat bullish, and that's going to be a positive sign for the S&P 500 to form new highs on the year. Next up is the healthcare sector, and we see healthcare also looking bullish, closing back above its 20 simple moving average yet again, and we do see confirmation of that trend strengthening with the 5 EMA closing back above the 13 and also seeing that separation forming. So overall, all of the sectors and all of the stock market indices are looking bullish in the short term, and that is a great sign when all of the sectors and all of the indices are aligning and they're all looking bullish at the same time. Next up is the US dollar, and this is very significant to pay attention to because the US dollar is at a very critical support trend line. So remember, while the US dollar is weakening, we expect to see asset prices inflate. So we have been seeing the stock market go higher ever since the dollar has been showing this weakness. As evidence here, you can see the dollar has been struggling. However, we know that the dollar is at a critical support line, and we could see the dollar start bouncing off support and coming up and forming new higher highs. So if we see the dollar go higher off of this support level, we would expect to see the stock market take a chance to cool off because of the inverse relationship. Remember, as the dollar has been going higher, we were seeing the stock market correct. So if we're expecting to see the dollar bounce off of this support level, it's very likely we would see the stock market go lower as the dollar goes higher. That is an inverse relationship that we know has existed since the stock market crashed back in March, and we need to continue to watch the dollar and see if that inverse relationship is going to remain intact. So right now the dollar is at a very critical support level, and we'll wait and watch to see if we're going to get a bounce off of that level. And remember, we want to see the dollar forming higher highs and higher lows if we expect to see this bull trend continue. Next up is gold, and we see gold coming back up and testing this critical support level as resistance. So if we expect to see the dollar bounce off support, we would also expect to see gold get rejected at resistance and head lower to the next support level. So right now we're not a buyer of gold until we see if it can come down and test this $1,800 level, and we would expect to be a buyer of gold at that level. However, if the dollar fails to bounce off support, it is likely that gold could break back above this old resistance level and form a new support level, and we could see gold start to form new higher highs, and we could see this trend reverse. And if the dollar weakens, we would expect to see gold go higher. So right now, we're not going to guess. We're going to watch the price action, and we're going to wait to see what happens with the dollar and gold before we decide what we want to trade on this market. Next up is Apple stock, and we like to call Apple stock our market moving stock. And we do see Apple with a bullish price action close today, closing back above all of the moving averages. And we still see that 5 EMA trading above the 13 EMA. So right now, we're seeing confirmation with Apple with the bullish price action and trends. And if Apple's a market moving stock, we expect to see that strength carry over to the remainder of the stock market. Next up is Tesla, our FOMO stock, and we see Tesla did break out of our consolidation wedge to the bull side, and we did find support right around the 13 EMA and the 20 simple moving average and our old resistance trend line. So Tesla's still closing above the 20 simple moving average, and we still have that 5 EMA trading above the 13. So we're going to give benefit of the doubt to the bulls because we have bullish price action and a bullish trend developing. So look for Tesla to come back above and test this $500 level. And if we can break above $500, that will be a new all-time high for Tesla, and we could see FOMO enter this market yet again. Next up is Bitcoin, and we did have Bitcoin holding up above support, but ultimately stuck in this wedge consolidation pattern. And it does look like Bitcoin is starting to break out to the bull side. So look for Bitcoin to break out of this wedge and come back up here to this $11,000 level. And if we can break back above 11,000, that will be a great sign that we're going back up and testing this $12,000 level. So we always want to acknowledge that Bitcoin could get very explosive very quickly, and we're starting to see bullish developments in Bitcoin. So right now would be a great time if you've been wanting to buy some Bitcoin to start adding a small position and prepare for an attempt at this $11,000 resistance level. So going back to the S&P 500, we want to acknowledge that there's downside risk, and we know our support levels are at 331 and 329. And we also do expect to find support at the 20 simple moving average at $333. So if you're a bull, now is the time to start entering this market, knowing your support levels and know where to set your stop losses, just in case we do have that underlying risk in the market and we see lower prices. We will get stopped out, and we will get stopped out for a small loss before it becomes a large loss. But we're staying objective, and we're following the price action, and we're following the technical trend. And right now, all signs are pointing to bullish, so we are going to be bullish. Remember, we had this long-term bullish trend ever since the crash in March, and there was no reason to believe that this wasn't just an ABC correction before a resumption of that bull market. So don't let fear guide your decisions. Be objective, follow the price action, and follow the trends, and ignore all of the noise around us with stimulus deals and whatnot. It's strictly noise. Follow the price and follow the trends, and you're going to be on the right side of the trades more often than not. So please remember to help me out by smashing that like button on this video. I really hope these videos are helping you out. And if you haven't already subscribed to my channel, go ahead and do that now so you can follow along with all of my updates. Thanks for watching, everybody. And as always, I will see you in the next episode.